All right, is everyone in that wants to be in? Yeah?
Yes, everybody that wants
Can
to
I
play
get
the
a
game.
hey yeah?
Well, I think it would help if they knew the prize. 'Cause
What's that?
I think it would help if they knew the prize.
So we have
$10,000.
I know, right? We have a $50 gift, a Visa gift card, and I have a couple of them in case there's some ties at the end too. So,
Wonderful.
all right, ready? We got. Oh wait, all right, good, sweet. Kahoot at work.
So the object is to answer the fastest because the points go down as you take.
No, I don't think that's the truth. Is it? Maybe it is. I don't know. I'm sorry. I'm not a Kahoot professional, so I don't know that.
You know what? Yeah, that's the way it works.
There we go.
I'm just attending it.
Great. All right. First thing I want to say is, thank you so much for having FCM be a sponsor here. We're super honored to be here. It's awesome that your company is investing, obviously, in you, and providing you new knowledge to be able to get your, to help your skills or to increase the skills that you have. Hopefully, sell more homes, and I think that's awesome. So. We've got a few FCM people in the room, so I kind of wanted to take a minute to have everyone introduce themselves. I think that's really important because the people that you choose to work with, it's all about, right? Our business is all about relationships. So the people that you work with, you want to associate with, trust, right? Like trust is going to be a huge factor. You want to know a little bit about them. You're not just, the lender person that gets it done. The people that I like to, work with are people that you genuinely enjoy working with. I think that's important in our industry. So, my name's Ed Napieralski. I was born and raised in Grand Rapids. I went to Grand Rapids Catholic Central. I played golf at Davenport University. My wife, I've got a wife and two kids, a 3 and a 1-year-old. We live in Rockford. She was a teacher who now has joined the team and helps me do marketing, social media stuff, closing gifts, those kind of things, helps client relations.
I love your wife.
Yeah, she's a bomb.
Amazing.
And then I get to kind of crush like the actual loans and learning, all the government regulations and whatnot, which is the part that I enjoy doing as well. But so that's me.
Wait a minute, Ed. How long have you been doing lending for?
I've been in lending for 10 years, some operations and then some sales. So I've been in mortgage servicing, correspondent lending, some processing, got trained to do underwriting, and then moved into sales. So like 5 years of operations and then 5 years of sales, roughly. And I love it. And I don't see myself ever leaving the industry. It's awesome. So.
Great. Well, good.
Yeah.
Good. Well, I'm Sarah Kelly. I know a lot of you. Some of you I don't know. I'm a dinosaur. I've been around for almost 20 years. I got my start at a little company called Great Lakes Mortgage Company. I don't know if any of you have ever heard of them before. But I started off as the front desk receptionist, and then they shoved me into compliance. So I have a huge background in compliance. And then I'm from the Wild West before you had to be fully licensed to be a mortgage broker, so I was writing loans when I was 18 years old. So since then, I've been an underwriter, a processor. I've been a licensed loan officer assistant, worked with really, really great people from West Michigan, luckily. I'm now back onto an individual salesperson, hopefully building a little bit of a team here at FCM because it's a wonderful organization, like absolutely blowing the doors off from what we can do there. It's wonderful. We'll get into that maybe a little bit more later through this game that we're going to play. But like Ed said, we are super grateful and honored to be here just to have you guys get to know us a little bit better and hopefully work with you in the future. I love Sun Title, by the way. You guys are rocking it out lately for me.
We love you right back.
Yeah, thank you. Does anybody else want to
Steve?
speak, Greg? Would you like to introduce? Oh, it'd break everybody's neck, Greg. Get up here.
I've been lending 29 years as an originator. Mortgages are boring for the most part, so my goal has always been people need money. They need to buy a house, they need money. My goal has always been to show them the shortest, easiest
So you can sell their house again in 2 years and do it all over again.
Yeah, because when they look back on the transaction, it's going to lead to more referrals. If they look back and they feel pain, whether it's your fault or not, or it's title, anyone involved with the process, it's that activator in the brain. You want to create a good experience so they come back. And then this is Vito. Vito's starting on Tuesday. He's a new law officer. He's going to be on my team. We're going to be working together. So nice to meet you guys. Officially starts Tuesday, but I want to bring him along.
Yeah, Greg saved him from Rocket Mortgage.
Thanks, guys.
Yeah, I broke him up.
Yeah.
My name is Steve Wiltz. I have been in strictly mortgages for just over a little bit of a year, but I was a retail branch manager on the banking side for way too long. 13 to 14 years. So I do a lot of bridge loan, a lot of lending, that sort of thing. Managing people and people who manage people, you know that you don't really want to do that forever, or at least I didn't. And like Sarah said, I learned a long time ago that business and life kind of in general just kind of revolves around relationships, and relationships are there when we are visible. So I do a lot of content stuff. And it's another thing that I kind of help some of the agents that I work with too, is if you want ideas, how do I edit a video, how do I do this, like pointers and things like that, because it's fun to me.
How do I get enough followers to go live? Come on.
When he says he kind of does some content, he has like 400,000 followers, and like he's just cruising through whatever, and you'll see him. So.
But it's kind of neat. It came into, I never expected to be able to use it for what I'm doing now. But every once in a while I'll mix in a video about mortgage, and since we can write in 35 states.
More than that, man. I feel like it's got to be more. Yeah.
I think it's a few more.
It's all visibility, and I'm not going to be for everyone, and neither are you, right? I mean, there's clients I'm sure you want to fire, and it's a paycheck some days, and it just is what it is. But if they don't like how you do things, they can kind of move on. But it's all mindset. So feel free to grab a card, look me up if you want suggestions, or grab coffee sometime. Appreciate being here.
Awesome. All right, so First Community Mortgage, achieving the American dream. All right, we're going to get started. Quiz question number 1. What was the highest lifetime grossing movie at the global box office? Avatar, Avengers Endgame, Titanic, or Spider-Man?
That looks like me right now. Like, I got to hit the gym for sure. It was a long winter, so.
There's actual footage of me last night.
At the party.
Yeah, happy hour yesterday. It's great.
All right. We had 5 people that got it right. It is Avatar. Congratulations. So that one we're not going to expand on because I don't know if there's a lot to go after that one. But we're going to start off with a couple easy ones, and then we'll get into some mortgage content. But all right, ready? Ooh, and it gives who.
Oh, do you get more points like when you answer faster? Is that
Yeah.
how that works? Okay.
All right. Question number 3. What is the national animal of Scotland? Loch Ness Monster, Narwhal, stag, or unicorn?
That's me going after an appraiser this morning, pretty much. Not even kidding.
Chase down borrowers.
Yeah.
Knox.
Yeah. Take your comments off my recording.
But you will not take our freedom.
It's a unicorn?
Unicorn is the answer. Look it up. Look it up. I know, I thought it was crazy too, but and I put some that I thought stag. That was one of the guesses that I had, but if you looked it up, it's unicorn. All right, on to the next one. Let's see who is winning. Ooh, Vito. Very well.
Yeah, hey. Come on, Vito.
All right.
Show off.
What is the minimum down payment on an investment property? 5, 15, 20, or 25%?
I don't know where you found these gifts, but they're great.
Chip. Everyone loves a little Chip and Joanna.
It's after
I don't know, Ed, how much is it? How
We're
many
gonna
units
find out.
are there, Ed?
4, 3. Well, it's a good question. Great question.
Love
All right, we got a lot of people that answered that correctly. 15% down. Now, the people that put 5% down, I can see some logic in that. Who does anybody want to volunteer and say who did that or why? We'll talk about it afterwards, but let's keep going. Let's see who. Joe Dirt. All right, so we're gonna stop at this one because it's mortgage related, and we're gonna talk about kind of investment properties, what we do. Here's some of the just broken down. So the reason that I had mentioned, so obviously the 1 unit is a 15% down minimum for an investment property. If you're looking at a 2 to 4 unit, that's 25% down. Once you go past 4 units, you're generally looking at a commercial loan, which depending if you're writing commercial, you can do or not. But the reason I asked who put 5% down is, oftentimes you can, and I don't know if you're familiar with, and maybe you have some things that, if there's any investors in here, people oftentimes will buy a house for 5% down. They'll wait a year, move to another house, put 5% down, or if it is, we'd mentioned this is a conventional program, right? Like 15% down on a 1 unit or even a 2 or whatnot. That's a conventional program. A lot of people will go and do an FHA loan where you can put 3.5% down, even up to a 4 unit. Again, live in it for a year, 2, and then move out, again, now putting another 5% down on a home that you're going to occupy. You can continue to do that and house hack and put a very little amount of money down and continue to create properties that you can own. So now for your investors that are not willing to move, or this is going to be kind of just a the standard from Fannie and Freddie guidelines. Does anyone have any investors that they work with, or I don't know, any other investment hacks that they enjoy
I want to know what
talking about?
out there that's going, you can do 10% down in an investment. Those portfolio loans?
They have to be, yeah. So does anyone know what the difference between portfolio loan and a normal loan that somebody would get? Basically, some places that depending on the mortgage bank or brokerage or what have you, credit union, will have basically their own deposit dollars, right? So say it's a bank. People put their money in their checking and savings accounts or money markets or what have you, and they use those deposit dollars to back their own loans and shelf them and keep them on their own books. That's what we consider a portfolio loan. So in that regard, we're never selling it to Fannie or Freddie. We don't have to rely on their guides. We don't have to rely on some of their the things. And FCM does have a nice portfolio. Really a balance that we can lend off of kind of unique things. So if it doesn't conform, or if a different lender says hey, we can't do this or what have you, there's an option that that we can. So we go to a credit committee basically. We go to and say, hey, most of these guides are met. We've got investments. We know this is going to work. Let's make an informed decision whether we can do this or not. We also, put other programs like our, doctor loans or construction loans or those kind of things in there, but we'll get to those as well. But investments are, one of the things that we do. So we got to do 45 minutes. Yes. Sorry, we got it. We are on the clock. So I'll ask you. Or go ahead.
My question is, if a person buys a single-family home,
Yes.
and has 3 friends that want to move in and rent rooms.
Okay.
Are willing to sign a 1-year lease at $800 per room.
Yep.
And the income be used to qualify for the mortgage.
Do they put their deposit down too?
And they put a deposit down.
So yes, the answer is yes. Generally, even on a home prior. So if for some reason you're trying to do a non-contingent offer, if you have a lease and then a first check on the home that you're leaving, you also can use that as income right away for qualifying and negate your current mortgage payment, if that makes sense.
We use 70% of the income.
75.
75.
Yep.
Yeah. Bump up what they're renting rooms for, you know what I mean?
All right. Which athlete has been featured on the most Sports Illustrated? Michael Jordan. Most people got that right. A lot of twos on the other ones. All right. Ooh, Joe Dirt's keeping in the lead. Who's Joe Dirt? Oh boy. Okay.
How many times are going to answer wrong now?
All right. What is the name of Batman's butler? Alfred, Giles, Jeeves, Cadbury. If you have other more questions, please feel like I'd love for this to be very open. So yeah.
Can you guys do barndominiums?
That's
Becoming a thing, and I'm having trouble doing it.
so. We had talked about with FCM. They said that we can make an exception. The general rule is no, but again, with that credit committee, if it makes sense, right? This person's got 800 credit. They're going to be putting 20% down. Well, what I'm just saying, they've got, yeah. No, it doesn't have to be a unicorn.
They have fantastic credit score. It was like 600,000, 700,000.
Buying or building one?
To purchase.
So purchasing, you technically can.
Appraisal wasn't going to meet. And so that was our.
So when we say, did you get an appraisal and did the bank look at it? Because you technically don't need to get another comparable sale that is a barn dominium. It just has to have features of the home. So that's an important thing to know because and I think it's only Freddie. And so we would just have to know which investor we were selling it to in that case. But you can actually do it, and you don't have to have another home that is an actual barn dominium that's in the sale. So, yep. But they're creating, right? There's a lot of people that are starting to, they're catching wind. A lot of people are starting to do them, and I think that, when that happens, obviously things change, right? So there might be an investor that starts to take those on, and I think a lot of, because of how popular they're becoming. But so the answer, I guess, is yes. I mean, technically, there is Freddie and Fannie allows for it. You just have to, again, you have to have the right underwriter that's going to make the determination to say these comparable sales are, and at least one of them is like, the other. So
We have those underwriters.
exactly. So, all right. So, Batman's butler is Alfred. I didn't know that one.
Yeah, not awesome.
Ooh.
Let's go around the table now.
All right. 8 of 21. Which of these improvements are not eligible for a renovation loan? Swimming pool, garages, complete tear down and reconstruction, or kitchen appliances? Nice job.
Oh, I see. I told you.
That's really good. I know we have a couple of lenders out here, so they probably know what some of the answers. So the big thing, the takeaway from this, right, is if your buyer is looking at, hey, we really want a swimming pool. If that's a big feature that they want on their purchase, or we want to make sure that we have a third stall, or again, kitchen appliances. So say it is, whatever it may be. We can do that in a renovation loan, and our renovation loan is as little as 5% down, and you're able to finance those projects in that 5% down. And so here, I'm going to go to my next slide actually, because it gives some bullet points about the renovation loans, and we'll talk a little bit more about it. But all right, Austin, he's pulling away. All right, so so renovation loans again. So as little as 5% down. The reason I put this 75% of the lesser of the sales price plus renovation cost, or the as completed appraised value. So technically, you would be able to, on this renovation program, if there was a house for sale for $100,000 and you wanted to put $300,000 of work into it, so say it was a ranch and you're going to put a second story on and do whatever it may be, You technically can do that. It can 75% of the renovation cost can be the total package, right? So, and then you're putting 5% down on that 400 instead of right, and then so what they do is they get sworn statement or bids, plans, what have you from different contractors. They give it to an appraiser. The appraiser will look at it and say, okay, after these modifications are done or after these improvements have happened, we're going to give it a value of X. And then we would take, again, you can then put 5% down on that. Generally speaking, we say that those projects have to be done within 9 months. You can do extensions, and honestly, Fannie and Freddie allows it for, I think it's like 18 months technically, but we try to have it, generally the renovation would be able to be done in 9 months.
This is like purchasing the home.
Purchasing a home or refinance, either way. You can do it on a purchase or a refinance. So, but yes, if you find a house that, again, and in this market, it's, we've got a lot of, and it doesn't have to be just a first-time home buyer, but we have a lot of first-time home buyers where they might be willing to, if they can see past some of the, maybe it's a structure, or maybe it's a, just outdated or whatever it may be, and they want to have a bigger kitchen and a better, a better bath or whatever, and that's their limit's $300,000, but this is a $200,000 home. Go into it and say, all right, well, these bones are good. This layout is nice. You have a lot of square footage. What can we do to this? You can still put, again, 5% down and incorporate the entire project basically into your purchase. Pretty unique tool to be able to utilize. So
We can do those as refis too.
you can do them as refis. So current people, if you own your own home and they're like, man, we're having another baby and we don't really want to move. We love our school district and we'd like to have another a bedroom. You can do additions onto the home with this product, where likely, depending on how long they've been.
And their agent comes in and says, if you drop 50 grand, you get another 100 out of it.
Exactly.
Let's do these things to the house before we list.
Yep.
Long-term placing.
Right.
Now you get 5 of the house to sell.
Does the work have to be done by a licensed contractor?
So that's a great question. If you have 4 bids or less, and you want to, so if you have, if you're doing a kitchen, for example, and you've got a bid for cabinets and you've got a countertops and you've got a flooring or whatever, you can use those 3 bids and you don't need to have a general contractor. Once you go 4 or more, then you have to have somebody that's actually overseeing the project. So it's not a dollar amount per se, but it's which subs that you are using and the number of subs that will be incorporated into that project that you can use. So.
Yeah, correct me if I'm wrong, so if you've got a buyer that's doing a major renovation, it's gonna be difficult for them to move in. I believe you can finance up to 6 months of mortgage payments.
That is correct.
Projects, so you're not making payments while the home's being torn down, that's inhabitable.
Yep. Which is an awesome, yes. So, yep, that's another huge, another huge selling point for that as well. So, any questions on renovation? Pretty cool tool. Again, if you think that there's if you've got a buyer that you've been working with for a long time, and if you can somehow keep their imagination open with, hey, what would this look like if we could make this to be, more suitable for you? Could be a nice option. So. All right, 10 to 21. When was the first model of the iPhone released? 2001, 2005, 2007, 2010? Steve Jobs. Huh? I don't remember what the name of that show is, but. Ooh, only one correct. 2007. It feels like just yesterday.
Right before the economic crash.
I know, right? All right. Ooh, somebody's catching up. All right. What is the max seller concessions on a conventional purchase with 20% down? I'm not sure why we have that GIF on there. All of the other ones kind of made sense, but. All right, 6% is the answer. So, does anyone know the rules for conventional seller concession? Anybody? So it has everything to do kind of with your down payment. And I think this is somewhat backwards because they allow you to afford the buyer more seller concessions the more you put down, which I would figure that you wouldn't need them at that point if you're putting 25% down. 1 to 10%, you're on a conventional loan, the minimum is 3% seller concessions. Government loans are a little different, but we're talking about conventional on this particular one. Anything 10 to 25, you can put 6% towards seller concessions. And anything 25 or more, you're actually allowed 9% seller concessions on the transaction. So, and again, those seller concessions can go towards, buying down the rate, paying for your closing costs, starting your escrow, blah, blah, blah.
We can use it to buy down the rate.
Yep.
Everybody's happy.
Exactly. And in the last few years, we weren't able to utilize those very often, but they are becoming more, I would assume that you've seen them a lot more in the industry right now, and they're more, just prevalent, so. All right. Ooh, we got a lot in the 3,000s now. All right. True or false? Doctor loans must include student loan payments into their debt-to-income ratios for qualifying.
Oh my gosh.
What's the other one? It's Grey's Anatomy, and then what's the other one that's the...
ER, man.
Or... There's another one, I thought.
That's it.
Yang. False. So, for our doctor loan program, actually, it's on the next slide, so I'm going to go there. Let's see who got... Ooh, somebody's making a move. Man, there's a lot of close ones. All right, so we had talked about the the portfolio products that we have. This generally will back these loans, so we can do something that we don't have to abide by the government regulations by. 0% down, no PMI, and obviously the loan amounts are much more than a normal conventional allowable limit. So. These are these are awesome programs for the doctors. And to come back to the debt to income ratio and using student loans, so doctors obviously have generally a lot of student loans. We don't have to use those monthly payments into their calculations for qualifying. So allows them also to be able to afford the home that they likely would be or want or be able to afford. So if you ever run into or if you have a client that is a doctor, this is a nice program and can save them some bucks.
And our rates are better than anybody else.
Very true. We also have like 30-year, 15-year fixed mortgages on this. So a lot of lenders that I've seen that have doctor loans, they might be a 5-year ARM or a 7-year ARM, and that's the only thing that they offer. We do have fixed 30-year, fixed 15-year products with this too, which is oftentimes a big selling point for them. So, questions? All right, we'll keep rocking. For every $10K in loan amount or purchase price you go up or down, how much will the monthly payment adjust?
What are interest rates at?
Today's rates. 35, 60, 85, 120.
That's me looking at my amortization schedule.
I will say that Greg still uses his calculator to figure monthly payments. I watch it, it's pretty...
Mortgage calculator, you still got that bad boy?
Yeah.
I do like that.
Awesome. A lot of people got this one right. $60 a month. So this is a good thing to know, I think, when you are talking to clients. And it's also an important thing to know based on, like, for our approval, right? We'll tell you, hey, this is where we're approved at, and some people get a little bit more aggressive or conservative depending on who you're working with. But if you're buying in East Grand Rapids, or if you're buying in, wherever that has a lesser tax rate, that approval can change really fast if you only have $60 a month in either debts or income, up or down. That's $10,000 in purchasing power and or monthly payment. So so if if we tell you you're approved for $250, well, tell us the address, right? Like, we need to know, like, what the actual taxes are, or if that house in particular hadn't been sold in 30 years and that current tax rate is super low, we get to use that current tax rate for qualifying. We don't have to anticipate the future, so they might be able to get a bigger home. Now, we would obviously make sure that we talk to them and say, hey, your taxes are going to go up in a year. Like, they're going to be a lot more. Your payment's actually going to be this, but we can, potentially get them approved for more than, what we would say. And the person that says, well, I want to stay right under this number, but they, a $300,000, for example, but this 330 is, it's gorgeous. Well, monthly payment, you can kind of help them, distinguish. Yep. So it's good. Just a little tidbit of information that I think is pretty useful. So, John, Scott, Jenny, Austin. All right. What is a group of zebras called? A crash, a dazzle, a streak, a shadow. That was fast. A dazzle. Streak made a lot more sense because they're striped, but dazzle is the answer. I think there's only one right? What is the minimum credit score to be deemed as A+ credit? What's that?
On the office.
Yeah.
I declared it.
740. 800's awesome. So most, all banks really, anyone that I've ever talked to or anyone that I've ever worked for, anything that's 740 plus credit, you will get the best rates that anyone can provide. And that generally goes for, I think, auto loans as well. Maybe. I'm not sure. I've never done auto loans. Actually, he's been doing that for several years. But for mortgages, if you have 740 plus, we're going to be able to give you our best rates. So, and that's mortgage rates. Now, in terms of monthly PMI, if you start going higher, like into that 800 or whatnot, monthly PMI can change on even higher credit scores or different fluctuations. But the true, what program we can afford or what, or that we can offer and or rate that we can give you. If you've got a 740 score at least, you've got A+ credit, and anywhere you go, you'd be able to get the best rate you can get. So that's kind of a good goal to have. So I did want to stop a moment and just talk about credit. We have, so I guess I'll talk, does anyone ever coach? I'm sure you probably don't. You probably would like to stay in the own lane, but coach anybody on what your credit score is compiled of or how to increase it. If you don't, we have nice tools that basically can formulate a plan and have really solid projections as to what score we could potentially get to. And by that, I mean, like, could have it changed in a few days, not like, hey, come back to me in 60 days or in a month. The way that we can accomplish that, so for example, say somebody has a 680 score and they might be better for them to go FHA, but we know they have the ability to have a 720 score just if they were to take $1,000 and pay off credit cards or whatever it may be. we can print up a recommendation or a step by step to say, all right, take this $1,000, pay down your credit card or whatever it may be to this exact balance. Send me proof that you've done that, and we can then go back to the credit bureaus after just a few days and have it adjusted. And now all of a sudden we can be approved for maybe a better program, better rate, better whatever it may be. So. And then it keeps the guessing game out of it, right? Like we're not just like, oh well, pay your stuff down to 10% or 15 or 20 or whatever it may be. No, it's like it's a specific dollar amount that and then we know exactly, on a 95%.
Yeah, talk to us about it. Don't log into Credit Karma. Credit Karma is to credit what Zillow is to estimates on your home value.
Yeah.
You know what I mean? And a lot of people like to talk about Credit Karma on
Yeah.
the phone with us. We're like, just let me pull your credit and fix it, please.
Yep.
I get a lot of concern with that. They're like, I don't want to pull my credit because I don't get a hit on my credit.
Great question.
When you're ready to pull credit, because otherwise you're just wasting everybody's time.
Here's the long answer. Your credit score is compiled of a few things, right? So I would say 60% of your credit score is compiled of timely payments and utilization of credit. So the amount of credit that you're using versus the available credit. So for example, you've got several credit cards and you've got a $10,000 limit, and if you're only using $1,000, you have 10%. That's where you get your A+ scores. If you keep it under 30, so you've got a $3,000 balance generally, let's say, you're also going to have really good credit. Once you start getting to 50% or more, it's going to hurt your score a lot. But that and timely payments, again, is going to be 60% of your score, let's say. Another 20%, 25% is going to be, the longevity or the time that you've had credit or that you've shown that you've been paying back creditors. The amount of lines that you have. So if you're paying 10 creditors back, which sounds silly, like that actually is looked at as better than having less debt. So all of these things.
People that are scared to have their credit pulled, one thing that you can ask them, like up front, just so that or help coach them through this, that was like the thing that happened. Don't have your credit pulled. Don't have your credit pulled. Go down 30 points. We'll do this. We'll do that. When you're mortgage shopping, which we encourage people to shop, you're allowed to go out and mortgage shop. Like you can have 3 or 4 lenders pull your credit and not have it ding your score, but it's when you apply for different types of credit within that certain time period. On top of all of that is where inquiries will start to bring your score down.
So I would say that 5% or less, that part, and again, if you've only had your credit pulled once or twice in the last 2 years, they look at it really in a 2-year span. Your credit score is not going to be changed. If you have it pulled 10 times in a 2-year span, okay, yeah, then maybe it will. But again, it's still only 5% of what your score is compiled of. And then the second part to that is, if they're shopping for mortgages, they have recently actually enhanced this, where you could have your credit pulled 100 times in a 60-day span if they were all for mortgages, and the credit bureaus will look at that as one pull. So you have to. So again, and that's why we say, go ahead and shop, go rock out. But if they've already had their credit pulled, it's no issue for them to have it again as long as they're within that 60-day window, which generally speaking you will be. So.
First-time home buyers, no credit. Can you guys do manual underwriting?
We can, and we have, again, that's something that we can also coach them for. How do we get, a credit score either quickly, or how do we? That's where we also teach them how, all right, if we are going to get a score in 6 months.
I would rather have somebody with no score than somebody with a low credit score. So we ask them
Yeah.
to do no credit scores.
Mm-hmm.
Another tool we use too, is monitor base for if we're working on improving that credit, it monitors their expedient, I think is what we call, or experience in the background. So we can put them into there, and if they're working on getting their credit up and they're not where they are at, it'll alert us, kind of just going to pull for them, wait for changes, and then we know when they're ready again, and then they can get back out there and start looking for them.
I know. 18 to 21. We're almost there though. We're in perfect timing. All right. What was the first toy that was advertised on TV? Mr. Potato Head, Barbie, Slinky, or the Magic 8-Ball?
Can I just interject on that? Paying $60 a month for something into a strategy that you might want to look at. If you have someone for $300,000, what we base the approval on is actually the maximum payment. That's how we calculate that ratio. So I wouldn't necessarily discount someone who found their dream home for $350,000 or $370,000 really, really low. So that would make their monthly payment on that property within qualifying. So I would always just check with your lender and have them run numbers on a specific house. I wouldn't pigeonhole yourself into 300 because you might find a 360 with really low taxes because we'll qualify based on what they are currently. Of course, we'll tell them what they will go to, but it's just something to keep in mind as far as max purchase price goes.
Mr. Potato Head is the answer. First toy that was advertised on TV. All right, what do we got? Ooh, wow, is this close? All right. The average home purchase takes how many days?
For who?
Great question. Look it up. This is crazy. So I think that our lenders in our area, are we getting close to time?
Yeah, I just wanted to interrupt a minute, just to let everybody know, there is no eating in the Big B Lounge. So when you get your boxed lunch, you can either eat in the ballroom or anywhere on this end. But the Big B Lounge right there, we cannot go.
Thank you.
Yep. Again,
Now,
5 minutes.
I don't know, like you had said, there's outliers. I also don't know, like, if this is somewhat to have to do with in other states, they require to have an attorney close different, sales. Rather, in Michigan, we only have to have title company be able to close it. I'm sure there's a lot of different ones, but I honestly, like in Michigan, I think that, I don't know if it's because we have, more of a metropolitan area where we have competition. You have to be able to close it, sooner, or else you're going to die. But when I say that, you mean like you're going to just not be in the end, right? But like, that's the realization, is that it actually it's crazy high, and I just thought that was unique information.
I would get to the next question so we have a winner before lunch, but while we look at what this question is, can you use that time to highlight the program that we're rolling out in February?
Yeah.
Pre-underwriting.
Yeah. A veteran can have 2 VA loans at the same time. True or false? That went really fast. It's true. So 50-50 answers basically here. So this is kind of a misconception. You can technically have 2 VA loans at the same time. It is kind of has to be kind of a specific scenario, and that scenario generally is that you are still employed and they are having you transfer. So like if you have a VA loan here and that veteran they're being forced to, or they're being asked to go to a different state or what have you to continue their service, you technically can use another VA loan even without selling this, and you could use this as a rental or do whatever. Now, if this VA is moving back to be a civilian, we can't. Or if they currently are a civilian and they're going from a VA to a VA, you can't. But in certain situations, you can actually have 2. So I thought that was unique, because I think that most people are like, no, it's impossible. Well, actually, it is possible, but depending on the situation. So. VA loans, again, if you've got a veteran, and I read a stat too that it was like 60% of veterans, only 60% of veterans like utilize or even know about having this benefit to them. So it's an awesome benefit, right? Again, it's another 0% down, no monthly PMI. We don't charge any bank costs for them, so. And then their liberal underwriting, their debt to income ratio can go really high, so they can afford kind of whatever they want. If you've got a veteran, it's an awesome program to utilize, and I think we have one of the best VA programs in town. So. Scott, nice job, man. Awesome. All right, so since they did show 3 different people, what I'm going to do is I'm going to give Scott $100, and I'm going to give the other two $50. So all three of them come on up, and then we'll disperse. Does anyone have questions? Anything that they want to add or?
Job at Green Lake.
Oh yeah, I guess we could say. So we are we're coming out with a kind of a cool program where we are going to have, it's basically a $5,000 close on time guarantee. So what we do is we're going to have an approval letter that says if we don't close in, I think it's as soon as 21 days, 15 days, that we will give the seller $5,000 if we don't close on time. Now there's obviously a few speculations for, if the appraiser can't schedule it for 20 days, or whatever it may be, obviously, but all of these, yeah. But these particular people, and we do it with almost every single buyer that we use, or that we strongly advise. This is going to be somebody that has already given pay stubs, W-2s, bank statements, photo IDs. We've already got them through underwriting. We're ready to close. Basically, we need an appraisal and title, and we're going to be able to close. So the odds is that we won't, we might have to pay those out, but we are giving that guarantee where it might help your buyer actually get that offer accepted. So.
10% down or more too before you make the offer. We can run and see if there's an appraisal waiver. So if the offer already through underwriting, no appraisal.
So yeah, yep. So we had one of those that, we'll talk about that later. So yeah, if you have, if you run into one of the people and you really wanted to, get to know them, or if you thought you would associate with them well, give them a shout and see if we can utilize that. So.
Stop by our stuff and we'll fill you in with more details. But thank you guys for playing the game.
Yes, thank you so much.